Have you looked at the price of gold lately? It has been on an absolute tear, smashing record after record. But listen, this isn't just about a shiny metal. The story of gold's incredible surge is actually a much, much bigger story about geopolitics, the future of the US dollar, and, well, your money. Let's dive in. Just look at these numbers. After a really strong 2023, gold just rocketed past $2,800 an ounce. And get this, some analysts are now projecting it could blow past $3,400 in 2025. This is not a small bump. It's a massive, massive surge that's making everybody sit up and pay attention. The big question is, why? If you ask most people why gold prices are going up, you'll probably get the same one-word answer: inflation. But what if I told you that common assumption is missing the real story? What if the true driver is something bigger, something playing out on the entire world stage? That's exactly what we're going to unpack right now. So first, let's bust a major myth and get to the new reality of what's pushing gold to these historic heights. Okay, so here's where the whole narrative gets flipped on its head. The myth is that gold is just this simple hedge against inflation, but the data doesn't really back that up all the time. For instance, think about this. Between 1980 and 1999, gold was actually in a long decline while inflation was rising. Doesn't quite add up, right? The new reality, the thing that really moves the needle, is geopolitical tension. It's a far more reliable predictor of gold's big moves. And you can literally see this pattern play out over and over again through history. In 1980, the Soviet invasion of Afghanistan sent gold soaring. The 2008 financial crisis, boom, another huge spike. The 2020 pandemic pushed it to yet another record. And the escalating global tensions we see today, well, that's what's fueling this current surge. Gold isn't just a commodity, it's like a barometer for global stability. So this isn't just about you or me looking for a safe place for our money when things get shaky. This modern geopolitical tension is fueling a much deeper, more profound shift among entire nations. It's a trend called de-dollarization. A major catalyst for this, the real uh-oh moment, was when the US and its allies froze $300 billion of Russia's foreign reserves. That sent a seismic shockwave through the entire global financial system. The message to the rest of the world was loud and clear. If you hold your reserves in US dollars, those assets can be turned into a weapon against you. For a lot of countries, this was a massive, massive wake-up call. And we're seeing the fallout in the numbers. Since the 1990s, the US dollar's share of global central bank reserves has dropped from over 70% down to just under 58%. And what's filling that gap? You guessed it, gold. It has now overtaken the euro to become the second largest reserve asset held by central banks. This isn't a theory, folks. This is a tangible shift that's happening right now. And to really wrap your head around the scale of this shift, get this number. Central banks bought a staggering 1,136 tons of gold in 2023 alone. That was the second highest annual total ever recorded, and they've kept on buying ever since. We are literally witnessing a historic, coordinated move into gold by the world's monetary authorities. So, who are the main players here? Well, China is a massive buyer, making a huge play for what they call financial sovereignty. Russia, obviously, is buying it to hedge against sanctions and try to offset its frozen assets. And it's not just them. Countries you might not expect, like Poland, Turkey, and India, are all stockpiling gold to manage geopolitical risk and diversify away from the dollar. It's a truly global trend. Okay, so with all this talk of central banks piling into gold, you're probably thinking, wait a minute, are we heading back to the gold standard? It's a natural question. Let's tackle that one head on. First, a quick refresher. What even was the classical gold standard? Well, basically it was a system where you could, in theory, walk into a bank and exchange your paper money for a fixed amount of actual physical gold. It anchored the value of money to something real and tangible. Now, that system had some good things going for it, sure. It created price stability and forced governments to be a little more disciplined with their spending. But, and this is a really big but, the downsides were severe. It was incredibly rigid. It basically tied the hands of central banks, preventing them from fighting recessions. It could choke off economic growth. Modern economies just aren't willing to make that trade-off. And if you're still not convinced it's impractical, check out this number. Economists calculated that for the US to go back to a gold standard today, the price of gold would need to be around $12,000 an ounce. Yeah, it's just not going to happen. So if a return to the past is completely off the table, what does the future actually look like? This is where things get really, really interesting. because we're not repeating history here. We're creating something totally new. So instead of one single global gold standard, we're seeing two key trends pop up. First, you have these geopolitical blocs, like the BRICS nations, Brazil, Russia, India, China, and their partners. They are openly talking about creating their own gold-backed currencies to bypass the dollar entirely. And second, we're seeing this digital adaptation, the launch of gold-backed stablecoins, which are basically digital tokens pegged to the price of real physical gold. So the distinction here is absolutely critical. The past was all about a physical, rigid, global system that's just totally impractical today. The future, it looks like it's going to be digital, it's going to be flexible, and it's not going to be global. It's going to be specific to certain blocks of countries. This isn't a return to an old system. It's a modern, strategic response to the world we live in today. Okay, so we've covered the what and the why. We've gone through a lot of history and geopolitics. But let's bring this all home. Let's talk about what this actually means for you and for the world we live in. The most important thing to understand here is that this isn't about panicking over a sudden collapse of the US dollar. The dollar is too embedded in the global system for that. The real destination, where all of this is heading, is a gradual shift towards a more fragmented, multipolar financial world. A world where the dollar is still incredibly important, but it's no longer the only game in town. So, what can you take away from all this? Well, a lot of experts now suggest having a small strategic allocation to gold, maybe 5 to 10% of a portfolio. But the key is to view it not so much as an inflation hedge, but more as geopolitical insurance. More broadly, it means it's probably a good idea to diversify, and most importantly, to just understand that the unipolar financial system that we all grew up with is slowly but surely changing. Which leaves us with one final big question. We are clearly at a major turning point in history, but are we really witnessing the end of the dollar's reign? Or is it just changing, evolving into a new, more complex role in a world that, let's face it, no longer plays by one country's rules? That's the big question for all of us to think about.